As Stellantis lays off hundreds of employees, many are questioning what this means for the broader auto industry. Jeep has just delivered a shocking announcement, sending tremors throughout the car market. This isn't merely a struggling brand, it's an industry-wide crisis that few anticipated. Sales are crashing, layoffs are mounting, and Jeep appears to be spiraling toward chaos. The figures are grim, the leadership decisions are highly controversial, and the consequences are enormous for workers, consumers, and the entire automotive landscape. So, how did Jeep, once a symbol of American strength and off-road adventure, find itself in such dire straits? What went wrong, and what comes next? Let's unpack the full story. For decades, Jeep was the trusted name for rugged reliability. But in recent years, choices made by Stellantis, Jeep's parent company, have sent shockwaves across the industry. The crisis became clear after Stellantis reported its financials for the past 6 months. A stunning 42% drop in stock value and a near 50% plunge in profits compared to the year before. These aren't just warning signs, they're alarm bells. Dealerships across the US are overflowing with unsold Jeeps. Sales of the Gladiator are down 21%, and even staples like the Wrangler and Grand Cherokee are sitting on lots as prices climb beyond what many buyers can afford. A core issue is Jeep's pricing strategy. Stellantis has tried to reposition the brand as a luxury option, pushing vehicles like the Grand Wagoneer past the $100,000 mark. But Jeep's legacy was built on affordability and toughness, not luxury. The 2024 Gladiator Rubicon, for instance, starts near $70,000, with even base models topping $55,000, well beyond reach for most consumers. Compounding the problem, Stellantis has overproduced. Lots are packed with unsold inventory, creating a severe financial burden. To manage the excess, the company has slashed production shifts and laid off hundreds of workers. The Detroit River Yard plant alone lost over 400 jobs. These drastic cuts underscore just how serious the situation has become. Jeep's crisis isn't isolated, it ripples outward. Consumers may benefit from discounts in the short term, but the brand's instability could lead to limited choices and price hikes down the road. For workers and communities that rely on these jobs, the layoffs are devastating. And for the broader auto sector, Jeep's downfall is a warning about the perils of misreading the market and abandoning brand identity. Ultimately, Jeep's collapse is rooted not in bad luck, but in strategic blunders. Stellantis miscalculated Jeep's appeal and steered it away from its foundational strengths. The result? A brand lost in its own identity crisis, and an entire industry feeling the aftershocks. More importantly, Jeep's current troubles highlight a classic case of a brand losing its way by failing to understand both its market and its loyal customers. For decades, Jeep stood for rugged durability and unmatched off-road performance. It wasn't about luxury or flash, it was about building vehicles that could handle rough terrain and endure the toughest conditions. The Jeep Wrangler, with its no-frills design and legendary heritage, became a symbol of freedom and adventure. But Stellantis, Jeep's parent company, appears to have lost sight of that identity in pursuit of higher profits and a more premium image. In recent years, the company has worked aggressively to reposition Jeep as a luxury brand. Vehicles like the Grand Wagoneer were launched with price tags rivaling those of established high-end marques like BMW and Mercedes-Benz. While the Grand Wagoneer certainly offers a plush interior and a long list of features, its price, often exceeding $100,000, clashes with the rugged, accessible reputation Jeep was built on. Meanwhile, Jeep's more affordable models have seen significant price hikes, distancing them from everyday buyers. The Gladiator, once known for being a practical, versatile pickup, now sells for nearly $70,000 in Rubicon trim. Even the base Sport S version starts above $55,000, pricing that's comparable to luxury trucks like the Ford F-150 Limited and GMC Sierra Denali. This raises a key question. Who exactly is Jeep trying to compete with, and what's the cost of that strategy? The ripple effect of mispricing. When a brand misjudges its pricing model, the impact can be widespread. Jeep's decision to position its lineup as a luxury offering has caused serious problems at the dealership level. Lots across the country are jammed with unsold inventory, from Gladiators to Grand Cherokees, serving as a clear sign of Stellantis' strategic missteps. Despite heavy discounts and incentives, dealers are struggling to move these vehicles. The core issue isn't just the high price, it's the lack of perceived value. Consumers expect a certain level of prestige and experience when paying luxury prices. While Jeep's vehicles are well equipped, they lack the brand cachet of luxury competitors like Audi or Range Rover. As a result, many buyers are opting for other brands entirely. This inventory glut has forced Stellantis to respond with drastic action, production cuts, shift reductions, and sweeping layoffs. In Detroit alone, over 400 workers have already been laid off, with more job cuts looming as the company tries to match supply with softening demand. These moves not only hurt employees and their communities, they also tarnish Jeep's image. A brand once known for toughness now looks increasingly unstable and disconnected from its roots. Declining consumer sentiment, but beyond pricing and production, perhaps the most damaging consequence is the erosion of consumer trust and brand loyalty. Jeep has historically enjoyed a devoted fan base. Wrangler and Cherokee owners often view their vehicles as a part of their lifestyle, symbols of independence and adventure. This loyalty was built through years of shared experiences, off-road events, and a sense of belonging. That trust is now fading. As Jeep pivots toward the luxury market, its traditional customers are left questioning whether the brand still reflects their values. The high price points are certainly a barrier, but the deeper issue is that Jeep seems to be abandoning what made it special. Loyal buyers aren't looking for a high-end SUV, they want a rugged, reliable vehicle they can take into the wild without worrying about denting chrome trim or scratching leather interiors. Meanwhile, competition in the SUV and truck markets is fiercer than ever, with more brands offering better value and staying true to their identities. Jeep's misalignment with its core audience is becoming harder to ignore and even harder to recover from. While Jeep struggles to define its identity, rivals like Subaru, Ford, and Toyota are capitalizing on the vacuum. Vehicles such as the Subaru Outback and Toyota 4Runner offer genuine off-road capability at a much more reasonable price point. Meanwhile, the Ford Bronco has successfully captured the adventurous, go-anywhere spirit that Jeep seems to be drifting away from. These brands are gaining ground by delivering what Jeep once did: rugged capability and affordability without attempting to dress it up as luxury. Stellantis strategy. Under fire, Jeep's troubles are increasingly being pinned on Stellantis leadership, particularly CEO Carlos Tavares, whose approach is facing mounting scrutiny. The numbers reflect a company in distress. Stellantis shares have plummeted 42% in the past 6 months, while profits have dropped nearly 50% year over year. These are not minor fluctuations, they're red flags pointing to a brand in crisis. At the heart of this turmoil lies a fundamental concern. Does Stellantis truly understand the Jeep brand and its place in the American market? Critics argue that the European-led management team has misread Jeep's heritage, mistakenly believing a pivot to luxury would expand its appeal. In reality, that shift has alienated longtime fans without successfully drawing in luxury buyers. Tavares has made sweeping promises about cutting costs and exploring all options to restore profitability. But instead of inspiring confidence, these moves have fueled uncertainty. Layoffs, production slowdowns, and threats of plant closures are taking a toll on worker morale and spooking investors. A tough economic landscape. Jeep's brand crisis is also unfolding against the backdrop of larger economic pressures. High interest rates and ongoing inflation have made it harder for consumers to afford big purchases, especially high-priced vehicles. Supply chain issues continue to plague the industry, compounding Jeep's operational challenges, but Jeep's situation is uniquely fragile. While all automakers are adapting to shifting consumer preferences, Jeep is especially vulnerable because it has veered so far from its core identity. Today's buyers are increasingly focused on affordability, fuel efficiency, and practicality. The era of high-profit, oversized SUVs is waning, and buyers are moving towards smarter, more economical options. The rise of electric vehicles is another disruptive force. Jeep has taken steps in this direction with offerings like the plug-in hybrid Wrangler 4xe. While innovative, the 4X carries a steep price, limiting its reach. And transitioning to EVs requires massive investment in both technology and infrastructure, placing further strain on Stellantis' financial position. Jeep, at a crossroads. Despite these challenges, there's still a path forward. Stellantis is at a critical juncture, and the decisions made in the coming months will determine whether Jeep reclaims its legacy or fades further into irrelevance. For Jeep to regain its footing, it must confront its identity crisis head-on. The brand was built on ruggedness, reliability, and adventure, values that resonated with off-roaders and practical buyers alike. The push toward luxury has muddied the message and distanced Jeep from the very people who championed it. To move forward, Jeep needs to reconnect with its roots. Core models like the Wrangler must remain the centerpiece of its identity, vehicles designed for exploration, not opulence. A clear, consistent message built around authenticity and capability can help rebuild trust with its core audience, while still attracting new buyers seeking a genuine, adventurous vehicle. Realigning pricing and product strategy, one of Jeep's most urgent issues is pricing. Many of its current models are priced to compete with true luxury brands, but lack the reputation or refinement those buyers expect. The Grand Wagoneer and Gladiator, for instance, are priced far beyond what Jeep's traditional customer base is willing to pay. This mismatch in pricing and perceived value is hurting the brand at both ends, alienating loyal customers and failing to win over luxury consumers. To fix this, Stellantis needs a more thoughtful pricing strategy. That doesn't mean slashing prices across the board, but it does mean offering a range of vehicles that cater to different budgets without abandoning Jeep's core appeal. Entry-level models with practical features should be emphasized, while higher-end trims can cater to those who want more technology and comfort, provided they still feel like real Jeeps. This tiered approach will allow Jeep to serve a broader market without compromising its identity. Balancing affordability with aspirational options is key to regaining relevance and restoring buyer confidence. Dealing with the inventory crisis. Perhaps the most visible symptom of Jeep's crisis is the bloated inventory sitting on dealership lots. Rows of unsold Gladiators, Grand Cherokees, and other models stand as physical proof of Stellantis' strategic misfires. Fixing this will require more than just production cuts. It demands a complete re-evaluation of what Jeep stands for, who it serves, and how it positions itself in a changing automotive landscape. Brands like Subaru, Ford, and even Toyota are capitalizing on Jeep's ongoing identity crisis by offering vehicles that better reflect consumer desires. The Subaru Outback and Toyota 4Runner, for example, offer off-road capability without the premium price tag. Meanwhile, Ford's Bronco has captured the adventurous spirit that Jeep seems to be drifting away from, a spirit once synonymous with the Jeep name. Stellantis, under scrutiny, at the center of Jeep's struggles is Stellantis, its parent company. Under CEO Carlos Tavares, Stellantis has come under intense criticism for how it's handling Jeep's challenges. The numbers are alarming. Stellantis stock has plummeted 42% in the past 6 months, and profits have dropped by nearly 50% year over year. These aren't just temporary setbacks, they're signs of a company in crisis. The core question: does Stellantis truly understand Jeep's brand and place in the market? Many critics argue that the company's European leadership team is out of touch with the American automotive landscape. There's a growing sentiment that Stellantis has underestimated Jeep's rugged heritage and overestimated the appeal of a luxury-focused strategy. Tavares has made bold declarations about cutting costs and considering all options to improve financial performance. But so far, these measures have only bred instability and uncertainty, marked by layoffs, production cuts, and looming plant closures. Employee morale is sinking, and investor confidence is waning. The broader context: economic headwinds and industry shifts. Jeep's problems aren't occurring in a vacuum. Rising interest rates, inflation, and supply chain disruptions are battering the entire auto industry. But Jeep's specific vulnerabilities, price misalignment, brand confusion, and an ineffective EV rollout make it particularly exposed. One of the biggest industry-wide shifts is a consumer pivot toward more affordable and fuel-efficient vehicles. The era of massive profit margins on large SUVs and trucks may be nearing its end, as buyers prioritize practicality over extravagance. The EV transition is only accelerating this trend. Jeep's electric gamble. Too little, too late? Jeep has made some inroads in electrification with models like the Wrangler 4xe plug-in hybrid, but these steps haven't been enough to counteract the brand's deeper issues. The 4X, while innovative, carries a hefty price tag, limiting its appeal to average buyers. Electrification must align with Jeep's core values of durability and off-road performance. Future EVs must prove themselves in the same rugged environments that made the Wrangler and Cherokee iconic. That means creating rugged electric SUVs and hybrids capable of handling the elements, not just offering compliance cars for urban buyers. At the same time, Jeep must invest in EV infrastructure, affordability, and range reliability to make its electric transition viable. And it can't stop at powertrains. Jeep needs to embrace innovation across the board. Connected tech, off-road navigation, modular design, and enhanced safety features, all while preserving its adventurous identity. Rebuilding trust with the Jeep community. Perhaps Jeep's most urgent task is rebuilding trust. High prices, excess inventory, and a perceived departure from its roots have alienated its core customer base. Loyal Jeep enthusiasts now question whether the brand still stands for adventure and rugged independence, or whether it's chasing luxury margins at the expense of authenticity. To win back its audience, Jeep must actively re-engage its community. That means hosting off-road events and trail programs, partnering with conservation and outdoor initiatives, launching loyalty and ownership programs, being transparent about pricing, production decisions, and long-term strategy. This isn't just about marketing. It's about making a visible commitment to the values that made Jeep iconic in the first place. Inventory and pricing. Missteps. Jeep's pricing strategy is arguably its biggest Achilles' heel. Many of its models, like the Grand Wagoneer and Gladiator, are priced in luxury territory, yet lack the prestige or perceived value of true premium brands. This disconnect between price and brand identity has alienated traditional buyers while failing to attract new ones. Moreover, dealership lots are overflowing with unsold Wranglers, Gladiators, and Cherokees, clear signs of overproduction and poor demand forecasting. Addressing this isn't just about cutting output. It requires a comprehensive overhaul of inventory management, supply discipline, and a clear focus on what consumers actually want. Jeep should offer a tiered pricing model. Entry-level trims that are affordable, practical, and true to the brand's rugged heritage, mid-tier models with balanced features, premium trims for those willing to pay extra for tech and luxury. This approach would re-establish Jeep's accessibility without abandoning its opportunity to upsell. Expanding Jeep's global footprint. While Jeep faces an uphill battle in the US, there's still untapped potential overseas. The brand's global recognition, particularly in markets with growing off-road or lifestyle vehicle demand, could be a lifeline. Doubling down on emerging markets or reinforcing existing strongholds could generate much-needed sales while helping diversify away from the saturated North American segment. Long-term vision. Adapt. Without losing your soul, looking forward, Jeep must think beyond survival. Its long-term success depends on adapting to future trends, from autonomous tech and AI to environmental regulations, without losing the essence of what Jeep stands for. This includes incorporating sustainable materials and eco-friendly manufacturing, enhancing end-of-life recycling efforts, innovating in areas that matter to its audience, like durability, practicality, and adventure. Readiness consumers are more discerning than ever. They demand real, not performative, commitments to sustainability and purpose. Jeep must show it's capable of evolving responsibly. Jeep's push to position itself as a premium, aspirational brand has had unintended consequences. Once known for rugged, go-anywhere utility, models like the Wrangler and Gladiator, once staples of off-road adventure, have now climbed into luxury territory with price tags to match. This move has pushed them into direct competition with high-end vehicles from established luxury automakers. As a result, many longtime Jeep fans, who admired the brand for its adventurous spirit and tough image, are finding themselves priced out. The disconnect between Jeep's roots and its current pricing strategy has created a growing barrier for loyal enthusiasts who can no longer justify the cost. Recalibrating the brand, to bridge this divide, Stellantis must rethink Jeep's pricing strategy. The solution lies in finding a balance, offering vehicles that are aspirational yet accessible. Jeep doesn't need to abandon its premium ambitions, but should instead offer a wider spectrum of options. A more diversified trim strategy could help. Affordable base models for budget-conscious buyers, and high-end trims for those willing to invest in premium features. Strategic incentives, such as trade-in bonuses, attractive financing, or seasonal discounts, could also help make these vehicles more attainable. Additionally, Jeep could consider expanding its lineup with new entry-level models that don't compromise on quality or performance. This approach could draw in new customers while reigniting interest among longtime fans who feel left behind. Adapting to modern consumer expectations, today's car buyers expect more than just tough looks. They want advanced technology, eco-friendly options, and a refined driving experience. Jeep's electrification efforts, including the Wrangler 4xe plug-in hybrid, show promise. But in a rapidly evolving market, more is needed. Jeep's future lineup must include fully electric SUVs and hybrids that maintain the brand's signature off-road capability and toughness. These vehicles need to deliver on performance, range, and durability to win over both loyalists and new customers. At the same time, Jeep must address lingering concerns about quality and reliability. Frequent recalls and high repair costs have hurt its reputation. By investing in better quality control and emphasizing long-term durability, Jeep can begin to rebuild trust and increase customer satisfaction. Fixing the supply chain and dealer relationships. The glut of unsold Jeeps sitting on dealership lots highlights deeper issues within Stellantis' production and distribution model. Dealers are the frontline ambassadors of the brand, and their struggles with overstock and declining sales are signs of misaligned corporate decision-making. Stellantis must open clearer lines of communication with dealers and involve them in strategy, shaping local strategies. Adopting flexible production schedules and smarter inventory management, ones that respond to real market demand,